Welcome back. You're watching the ET Money Show with me, Kavita Thapliyal. Now, not so long ago, cryptocurrency were the biggest rage among millennials. Investing in cryptocurrencies was seen as not only a smart and cool investment, but also a very Gen Z thing to do. Now, turn to December 2022, and it seems all that craze has faded away. Over the last couple of months, the crypto bubble has burst, sweeping major crypto exchanges and investors in its wake. Now, today on the ET Money Show, we will decode why millennials have turned their back against crypto and what you should do if you are a crypto investor. Let's bring on board Prashant Kumar, founder weTrade, and Sharan Nair, founder PYOR, to take the discussion forward. Good evening, gentlemen. Welcome to the show. Now, Prashant, first question to you. A lot of millennials that we keep interacting with are really disappointed with the current market trend and also have started thinking of different investment instruments, crypto being their first ever investment, and the way they have incurred losses has really, they've lost confidence in this particular investment instrument. I want to get the reality check from you. What's the status when it comes to millennials investing in crypto market?
Thank you, and thank you for the great question. If you think about any investment, and crypto is no different from that perspective, the secret to making money is not to follow anything blindly, not to get into an investment without thinking much, but has from the time immemorial has been about studying the trends, making sure that they understand what's right, what's not. And because we talked about Gen Z and how the market has gone down, smart investors make money irrespective of the direction in which the market moves. But absolutely, given that there has been a broader depreciation in the value of the major cryptocurrencies, anywhere between 50 to 80%, which by the way is not much different from if you look at the top US technology stocks also. They also have moved from 40 to 60%. But those who invested last year and held on for a long time and now looking at their portfolio right now, the depreciation value is alarming, and that will definitely demotivate. But then every recession and every such time also teaches the right methods to do things. And I hope that with this experience, people are studying crypto markets a lot more deeper before investing, which should have always been the case.
Sharan, what do you have to say? Do you resonate with what Prashant's saying?
Hi, Kavita. Thank you for having me. I largely resonate with what Prashant has to say. However, I would also like to accept that the industry has been a little disappointing, not in terms of the price volatility, because that's something like what Prashant mentioned happened across different sectors. So that's not something new. But it's more about what has recently happened with, say, FTX, Celsius, the way things have gone. For a lot of millennials, that has hit them hard, rather than the fact that the prices have really gone down. Because prices going down, investors going off, coming back when the prices shoot up has been something that has been happening over and over again. I've seen it for 8 years now, so I'm not worried about that. But what I'm really worried about is what our investors or millennials actually disappointed about is that a lot of these flag bearers, Web3 flag bearers, have kind of slightly disappointed the millennials. But I think that also teaches us the lesson that we need to do better. And it's just a matter of time before we bounce back. In fact, there is ETH India conference happening just next door. And if you kind of look at the turnout that's coming there, it definitely tells me that while millennials investments would have gone down, but their enthusiasm to build on the technology has not wavered a bit.
Prashant, now a very overhyped question now. I'm sure you've been asked about this a lot of time, but then this rough patch of the crypto market, when do you see this getting over? Everyone wants to know that.
If I knew, trust me, I will not be sitting here. I'll probably be pocketing $1 million every hour.
Yeah.
But having said that, right, and if you look at it, right, in 2008, I was 25-year-old. 1995, I was probably 12-year-old. And why I use these 2 years is in 95, Indian stock markets went through a lot of corrections, a lot of wrong things which were happening. And our stock market dipped to it took 3 years to recuperate. In 2008, 9, when the subprime crisis hit, it took like 1.5 years to recuperate. But a result of these things is what happens is the compliance becomes better, the organizations which are participating in the industry becomes better. And while I cannot predict how long it will take, but definitely I'm sure that as a result of the events which you mentioned, whether it is about a Terra bust or whether it is about the FTX bust that happened, I don't see it much different from Lehman Brothers going down in 2009 in that middle of the crisis. Whether it takes 6 months or a year or 2 years, the resulting system which will come out of it will be a lot more regulated, a lot more safe, lot more secure, and a lot more trustworthy for everyone to start following again.
All right, exactly. So my question is also particularly for millennials, or let me just call Gen Zs, in particular, because Sharan, what happens is these people who've put money in the crypto market, this is their first ever investment or their first ever money making activity, okay? And when they come across such kind of a setback or such kind of a market movement, it's definitely a learning lesson for them. But then somewhere down the line, it demotivates them or discourages them from investing in this particular investment instrument. How do you look at it, and what do you want to tell them?
I would like them to follow the
Yeah.
market and the segment even more than what they have been doing. And the very reason I gave the example of how old I was when
Yeah.
probably it happened,
Yeah.
I had a very small amount of investment in the equity markets.
But
It took
weren't
but
you but weren't you exposed with other investment instruments at that time before that? Or this definitely wasn't your
if you're
first ever
20, if you're
investment?
25, 26 year old, right? You're few years in the job. There aren't many things that you can actually do. And that's one of the things which I was in. And it, of course, it was a very rude shock to me. I actually took a year and for a while, I started to believe that investment is just wrong. Somebody comes and just takes your money off.
Right.
Took a few years to come out of it, but definitely it taught me a lesson that be very, very aware. Don't leave your money or just don't look at someone talking on a YouTube that, hey, I made 50% over this particular instrument. And you just get into that and you lose out to it. So will it be a shock? Yes. But if you just keep that shock and stay back for next 5 years and you don't come into the crypto market, probably that will be stretching things to the other extreme. So keep following, keep learning, and invest only at the right time with the right amount of patience.
Sharan, your view?
Sure. I think what the Gen Zs really need to understand is that while a lot of them really came for speculation, to be honest, so many of them just came in buying. If you look at the proof of reserve, some of the exchanges put up, you'd see some of the coins that a lot of people hold are coins that are typically not the ones that has a lot of fundamentals. So I think the first thing that Gen Z or anybody, as a matter of fact, that needs to take in care is that you're investing in the right kind of investments. Even within cryptocurrency, there are different cryptos and they have different fundamentals. So investing in the right ones. And the markets behave just two ways, right? Either goes up or it goes down. That's the nature of the market, right? So if the fundamentals on which you invested does not change, then over the long run, there is a very good probability that you would see your investments grow, right? And this is what Gen Zs or millennials or anyone in general should take into consideration before making investments.
All right. Now, the last question to both of you. In fact, I would like to know both of your views on this. Talking about investment strategies. Okay. Now, people have incurred losses. Talking about Gen Zs, they've also learned their lessons. But if at all they have the guts to move on in the market further, what is that thumb rule now they should be following? First, you, Prashant.
I think this question was already answered very beautifully, colleague, that even within crypto, look for the ones which has a deeper value.
Right.
And I'll connect it back to when I mentioned about the Terra flop show 6 months ago. The Terra was an algorithmically stabilized coin, which did not really have that much of a value as it was pretending to be. Now, once you start to understand, you pick up, let's say, an Ethereum, right, which is the destination for every DApp to come in. There are thousands and thousands of developers who are building apps which is actually utilizable across. You take up Matic, for example, right, which is a clear-cut improvement in infrastructure of the blockchain ecosystem. So you have to spot the value. And if you have spotted the value, in the long run, you will be able to make money. And if you're just trying to be a speculator and do a buy one day, sell one day, then I think whether it's crypto or any other market will not going to be perpetually beneficial. Be in for long term, be in with the right kind of cryptocurrencies, study how they yield value, and you're all set for investment. That will be my advice.
I think here are a few things that I recommend everyone to take care of. And I think that that applies across investments, not just crypto. But the first thing is stick to fundamentals. Second thing is only invest the money that you can afford to lose. It's sometimes disheartening to see people putting in a lot of life savings into it, which is absolutely something you shouldn't be doing. Crypto is super volatile. We are trying to make new things, but in that process, we may take huge hits. So be prepared for that as well. Not your keys, not your coins. So keep custody of your own coins. That's, if possible, that's the best way out. And most importantly, do not fall for scam. And this is not a get rich quick scheme. Nobody gets rich by just simply speculating tokens that would go up and come down, like what Prashant mentioned. Stick to fundamentals and be in it for the long term.
Right. A lot of this actually sounds like the basic thumb rules and fundamentals of financial planning and planning your portfolio. Well, that's all. Thank you so much, Prashant and Sharan, for being on the show and helping Gen Z plan their money if put in crypto market. And with that, we slip into a short break. But post that, once we come back, we'll answer your financial planning queries, and we'll be joined by our financial planner experts to do it all. And we'll give you a guideline as to how to trust your mutual fund distributor or advisor or agent. All of this after this break.